Hello everyone, today's video I thought I'd show you a worked example of how salary sacrifice actually works. So one of the announcements in the recent budget was the restriction on salary sacrifice as far as national insurance savings are concerned. It doesn't mean you can't put in a salary sacrifice more than the 2,000, just means that anything more than the 2,000 will be subject to NI. But I just want to run through an example of what exactly this salary sacrifice thing is all about. So let's go through an example starting with someone who does not have salary sacrifice. All right, so they got a salary of £50,000, okay, and we need to work out what the tax bill is. So let's assume, so they're an employee, they work for ABC Widget Co, and they're on 50 grand a year. So they're going to get the first 12,500 tax-free, or to be precise, 12,570. So they pay tax 37,430, and the tax rate is 20%, 7,486 of tax. All right. So their take-home before national insurance, so just purely their gross less their income tax, 42,514. It's just 50 grand minus their income tax. But of course, they've also got national insurance, which, to all intents and purposes, is just another tax. I mean, you know why they don't just amalgamate it, but they've been talking about that for decades. But there is separate national insurance on top of the income tax. And the national insurance is 37,430, which is this figure. It's the taxable figure at 8%. So, used to be a bit fiddly a few years ago where that figure was different to that figure at a different rate, but now it's the same amount that you pay income tax on. So, they pay 20% income tax on 37,430 and they pay 8% employees' national insurance on the same amount. That's 2,994. So you can see if you amalgamate it, you just basically, it's 28% tax in the basic rate. But that's politically a hot potato to say, oh, your tax rate's 28%. People sort of, they think, oh, it's 20%. Yes, it is, plus national insurance. So really it's 28. Hey ho. So anyway, then we say, okay, so this particular person, what are they ending up with in their back pocket at the end of the day? So after income tax of 20% and national insurance of 8%, they are taking home £39,520. £39,520 on a salary of 50,000. Right, okay. So then they do this salary sacrifice. And let's just take an example of this limit change of 2,000. So let's go with that number. So then their boss says to them, or they suggest to their boss, they say, look, instead of paying me 50,000, why don't you pay me 48,000 and I will sacrifice 2,000 of my salary. So you pay me 48 instead of 50, and that 2,000 you can pay straight into my pension. Oh, okay. So the employer is happy with that. You see, it's a win-win situation because there are savings of employees' national insurance for the staff member, and there's savings for the employer's NI for the employer. So it's a win-win. So that's why you'll find that this is the reason it was brought into the budget to curtail this, because so many hundreds of thousands of workplaces have done this. Because why wouldn't they? Because everyone is saving tax with this so-called salary sacrifice. But how much tax? So let's go to part 2 of the workings. So, salary sacrifice. So remember, the guy, he said, I'll swap you 2 grand. You pay me 2 grand less in salary, put it into my pension. So, salary, 48,000, not 50. Tax-free slice is the same, 12,570. So the taxable amount that he's paying income tax on is 35,430, which is 2 grand less than it was before. Income tax at 20%, 7,086. So what he's got in his pocket before NI is 40,914. So, but he's also got £2,000 going into his pension pot. So when we look at the national insurance, so he's going to pay employees NI on a lower amount. So it's 35,430 instead of on 37,430 at 8%. So he's paying 2,834. So the guy's take-home pay with the £2,000 of salary sacrifice is 38,080. All right, 38,080. But of course, the 2,000 has gone straight to his pension from his employer. So you've got to sort of factor that in. We've got to try and compare like for like, see what the savings are here. So, okay, so then we say, well, all right, so that 2,000 going in, that means his take home after tax and NI plus 2,000 in the pension, 40,080 compared with 39,520. So he's quids in by £560 better on this deal, which is just the income tax, 20% times the 2,000 salary sacrifice, and the employee's national insurance, 8% of £2,000. Those combined give £560. So you say, oh, okay, so it's better that he's done this salary sacrifice. So yeah, he's quids in for doing it. But actually, when you take a sort of deeper dive into this and you say, well, if you're really trying to compare like for like, because it is a little bit fiddly, because, you know, like I said, you've got money going into different pots now. It's coming into your back pocket plus somewhere into your pension. So if we were truly comparing like for like, surely we'd say this. We'd come back to the original scenario and we'd say, all right, so he's got his higher gross of 50,000, gets taxed, he got 39,520 in his back pocket. But then assuming he then says, actually, I want to bang in a couple of grand into my pension. So from him, as an individual, £2,000. So he's then left with 37,520. But when you make an individual contribution of a pension, it gets grossed up by HMRC when you're a basic rate taxpayer. So there's nothing more to claim back in his tax return, but HMRC will wire another 500 quid into his pension pot for that extra tax relief. So really, when you talk about what he's got in his back pocket after all taxes, plus an amount that ends up in his pension pot, he's got 37,500 plus 2,500, because the 2,000 gets grossed up. So his actual pension pot's going to have 2,500, even though he himself has put in 2,000. Total £40,020. Now, over here, when the salary sacrifice, it's an employer contribution. So the employer wires in £2,000. It doesn't get grossed up at the other end like it does on an employee contribution. So again, comparing the like for like, you say, what's the actual cash in your back pocket plus whatever has ended up landing in my pension pot? And you compare those. Well, you come back to that figure that we've already looked at, 40,080. But hang on, what was scenario one? 40,020. So actually, you're only 60 quid better off. Not 560 quid when you factor in the fact that you could use that, your own £2,000 contribution, which will then get grossed up. So you just got to be careful when you're sort of doing the cost benefit on this. If you're thinking about doing some salary sacrifice, and say, well, what's all the scenarios? Don't just sort of leave it and say, oh yeah, it's take home versus that and that. Think through, well, actually, I could still then put in a personal pension contribution rather than salary sacrifice, and then you'll see the cost benefit ain't so massive. I mean, that's, you know, 60 quid better off. It's still better than a kick in the teeth, but there you go. So just an overview there. Thought I'd just do some workings on what exactly salary sacrifice is and the savings to be had. If you like this video, please do subscribe, and as always, I'll see you soon.